Welcome to Jargon, a series where we simplify self-employment by explaining business waffle in plain English in under 2 minutes. When you start working for yourself, one of the initial benefits is that you don't have to pay tax as money comes in, unlike the pay-as-you-earn or PAYE system, in which your earnings as an employee are taxed at source and visible on your payslips. As a self-employed worker, your first tax bill is likely to be due on the 31st of January, which falls after the end of your first tax year. This runs from the 6th of April to the 5th of April each year. Although limited company directors usually pay themselves a salary, which has any tax taken due via PAYE, they do also have to submit an annual self-assessment tax return to declare all of the income they receive through dividends from their own company or income from any other sources. Now, HMRC runs a system called Payments on Account for those who pay most of their tax through self-assessment. And if your tax bill is more than £1,000, you'll need to make a payment on account. Payment on account means that in addition to the tax bill that you would usually need to settle by midnight on the 31st of January, which is the self-assessment deadline, you also need to pay half of your total expected tax for the next tax year by the same deadline. The other half of it is then usually due on the 31st of July. Now, this can often come as a shock for newly self-employed people who typically face a tax bill roughly 50% higher than they'd be expecting. If you can't pay on time, you're likely to face interest charges, so you should get in touch with HMRC as soon as possible to try to arrange a time to pay agreement. The size of the payment on account is based on your tax bill for the previous tax year. HMRC assumes that you will continue to earn at the same rate and therefore you'll pay roughly the same amount of tax in the following year. Once you are over the initial hurdle, payments on account simply spread your tax bill across the year and can actually make it easier to budget. If you have an accountant, they will be able to advise you on the best course of action. If you know your tax bill is going to be lower than last year, you can actually ask HMRC to reduce your payments on account. You can do this either online or by post. Our article, What is a Payment on Account and Do I Have to Pay It?, goes into more detail about this. Being self-employed or a company director has its challenges, and the last thing you need is waffle or jargon, making things even more confusing. At Crunch, our experts will help you understand your tax requirements and do all of the number crunching so that you can get on with doing what you love. Visit crunch.co.uk to find out more about our award-winning online accountancy services and software.